The broader altcoin market started a correction earlier this week after the strongest rally of 2025. As we break down the macroeconomic information that are causing this brief correction, it will provide us with valuable insight into what sectors are going to be ready for the strongest upside growth, as well as when sentiment in the altcoin market is going to shift from a temporary correction back into parabolic upside growth. Using the technique we're illustrating today, we are able to put together trading plans for the strongest performing asset across all of crypto, Rect, an AI meme coin. For the past 30 days, as well as the past 7 days, Rect has dominated altcoins in upside growth using inflation-based data. We got a surprise reading on PPI about 2 weeks ago. Economists were projecting it would come in at about 0.2, 0.3. It came in super low at 0. Therefore, we knew this would be the trigger to break Rec out to the upside. This rounded bottom formation is showing sellers slowly in a healthy fashion exiting the book order. Once all the sellers have been removed, and it's only buyers, that's when the cup and handle produces these parabolic upside growth. Because we are able to identify resistance with inflation-based data, prior CPI, prior inflation policy on May 15th, we are able to target that PPI would be exactly when REC went into parabolic price action. And it's been the best swing trade you could get your hands on. This is something that we do inside our trading group month after month. We always end up coming up with the best swing trade possible. And that all comes down to macroeconomic timing. And that brings us to where we are today. Once we break down the macroeconomics causing this momentary market correction, it's these exact puzzle pieces that will show us where the next top performing swing trade is going to be. The event that caused all this downside was a national bank meeting with all the central banks as they started discussing how much money Wells Fargo, JP Morgan, Bank of America, these guys can lend out based on the capital they have in store. And what this all boils down to essentially is the central banks are saying, if you guys want to loan out more money, you need to buy more US bonds. This is a major part of every single bull run. Right now, we're waiting for the bull run to kick into high gear and full-blown quantitative easing to take place. This narrative is also deeply connected to the Genius Act. The more bonds they have, the more they're able to issue stablecoins. And those regulations won't go into strict effect until 2027. This is super bullish for cryptos that are associated with stablecoins. Now, the up and coming macroeconomic factors, we've got the meeting, we've got the PCE inflation, and then we've got tariff snapbacks. They're all happening next week. So it's going to be action-packed with high volatility in trading assets. Looking at the last time tariffs got started, we were the only group that highlighted Zebek at 15 hay pennies way back on March 1st, with the catalyst being tariffs and thus the effect on stablecoins. Since then, Zebek had amazing upside price growth, and now everybody wants to talk about it. But it's the exact same catalyst that we've already tested on Zebek that's getting ready to trigger more upside growth, specifically in cryptos that are ready to issue, handle, and manage stablecoins. Putting all the puzzle pieces together since the start of this video, I'm not a financial advisor. Nothing that we cover is financial advice. On Tuesday, during the bank regulation meeting, the altcoin market cap started seeing some downside as capital is diverted away from riskier assets and into more concrete bond market. This in turn has the banks eager to show their shareholders some profits, some gains. The bonds that they purchased are going to earn a 5% APY when the rate cuts happen in September and then again in early 2026. The yield on the bonds will also decrease. So while the banks are pulling in that 5% yield, their second revenue stream, all based around stablecoins, is the minting process. When the banks mint stablecoins, it's not for speculative trading like it is for retail investors. When banks, foreign nations, and institutional investors are minting stablecoins, they're doing it because they want to lend against those assets. The original model of all banks is to lend against hard assets. Now, banks are getting ready to move into an entirely new sector, cross-border payments, and they're doing so under the flag of stablecoins. When tariffs snap back on August 1st, they're going to be testing this system out again. This is the exact catalyst that put the trading plan for Zebek together and eventually caused that massive upside growth. Right now, all these cross-border payments are handled by the SWIFT system. Who's the number one contrarian to cryptocurrency? It's JP Morgan. Guess who owns the SWIFT system? JP Morgan. They understand that stablecoins is like Netflix and they own blockbusters around the world. As Cathie Woods would say, it's disruptive, innovative technology at its finest. And in a moment, we're going to take a look at some other cryptocurrencies that are getting involved in stablecoin issuance besides just Zebek. Hopping over to a list of projects that are backed by Circle venture capitalists themselves. We've got Sui, Near, Aptos, Say, and of course, Zebek Network, all positioned to see upside as tariff snapbacks take into effect. Looking at the total 3 chart, we can see the altcoins had their biggest rally of 2025 starting at the FOMC minutes, where the Fed released key information stating that they're ready for a bull run. Right now, we're headed into a massive catalyst cluster. We've got an FOMC meeting on the 30th. We've got a PCE inflation print on the 31st. And then we've got tariff snapbacks on August 1st. Timing this market breakout will require careful attention to detail to each and every one of these catalysts put together. Traders who have experience in analyzing these macroeconomic events will be able to catch leverage trades to the upside, like the Ethereum 5x trade we opened at 3,100. Right now, Ethereum's pushing 3,800. A 5x leverage trade has already doubled, pushing a triple up, and it's continuing to run to the upside, maximizing profit. And for the traders that study these macroeconomic events, they have a deeper understanding of what's really going on in the market. A lot of people are looking at the downside that started on Tuesday and they're just like, it's just a market correction, happens all the time. Meanwhile, in this video, we just explained it's specifically because capital is being diverted into the bond market because of this banking meeting that they had, where they went over a lot of new requirements. To get into these macroeconomic data and study with a group, take a look inside our VIP. It's a great value. We've got loads of insight and trading plans detailing projects that I think are going to see the most gains based on this new stablecoin catalyst. Thanks for checking out this video, guys. We'll catch you on the next one.